Today, we are looking at the 7 steps to better cash flow for your business. Now, this is something that we've been talking about for a long time over at the Wow Company. For those of you who don't know, Wow is an accountancy practice that works with agencies, typically those with between 8 and 80 staff. And we've been doing this for nearly 20 years now. And talking about cash is part of our mission to help you build a beautiful business. A beautiful business is one that is led with purpose, guided by a clear strategy, and soulfully grown. And having the cash in place will ensure that whatever you want to achieve, whatever your purpose is, you will be able to do that on your journey. That is what we do at Wow, and that is what I will be doing with you today, because a lot of agencies right now are finding times challenging. And if you're one of those, I have the solutions for you. So step 1 to better cash flow is to be really clear and to work out where you're at right now. And I thought it'd be interesting just to explore 3 groups of businesses at the moment and for you to just ponder which one you fall into. So first up, are you having difficulties? Does this sound familiar? Decisions keep getting delayed. We're having to offer bigger discounts in order to win work, and that's impacting margin. Even projects that have been signed off aren't starting as planned. I can see the cash draining from the business as each month passes. This can't continue. That was an email that I received from someone ahead of this presentation. If that sounds familiar to you, you are not alone. But also I wonder whether actually, are you growing quickly? I also received this email from an agency owner. We've doubled revenue over the last year from 700K to 1.4 million, and margins are good. However, with larger clients comes bigger and more expensive projects and longer invoicing terms. With some clients on 90-day terms, we have reached a glass ceiling and we can't grow without access to liquidity. Maybe you are in that camp, or perhaps you are somewhere in between. Again, this is an email that I received from someone ahead of this. And by the way, for all of the webinars that I do, if there's something that's on your mind you want me to cover, please do email in and I'll do my best to cover it. A lot of the things you see here today in this presentation have been influenced by questions that you've sent ahead of time. So maybe you're somewhere in between. We're doing okay at the moment, but I'm cautious about what 2024 will hold. And I want to get into good habits with my cash management. We've not had to worry about this the past few years, and I sense we could sharpen up in a few areas. So we're now going to run an anonymous poll just to explore which category are you in. So tell us where you're at. Which best describes the situation? Are you having difficulties? Are you growing quickly, or are you somewhere in between? None of the results will be recorded. I'm only going to be sharing the overall percentages. But I thought it'd be interesting to see where you're at. So I'll just give people a few moments to complete the poll and then share the results with you. So this is what it looks like. We have 33% having difficulties. And I guess whilst that's incredibly challenging at the moment, I guess there's some comfort in knowing you are certainly not alone in that. It's great to see 14% are growing quickly. Now that creates a different set of challenges, but nonetheless some challenges. And we've got around about half somewhere in between. Now, wherever you are at with this, I will be sharing tips that will help you on your journey, that will sharpen up your cash management and give you the cash you need to thrive next year and beyond. So a key stat to help you work out where you're at right now is this one. The number of months of overhead, which includes the total business costs, including paying yourself, as cash in the bank. This is a stat that we've been looking at in Bench Press since 2012. We've been tracking it closely. And these are the stats that we have from earlier this year. For £1 million plus agencies, you can see 10% are at risk. This is not a place you want to be with 1 month or less of overheads as cash in the bank. At the other end, the secure end, we've got 30% of agencies with 6 months of overhead as cash. And then we've got some in between. For the smaller agencies under £1 million, it's a little bit more fragile. We've got more at risk, fewer in that secure section. And when we run our survey again in January, and by the way, a massive thank you to everyone that takes part. I wouldn't be able to share these stats if it wasn't for your efforts. So thank you for taking part previously, and thank you in advance for taking part in January's survey. When we run that survey, I'm absolutely certain these stats are going to look different. Agencies are holding less cash than they have done for a long period of time, and that is causing challenges. But just understanding this number is really important. What you can also do in terms of once you've worked out this number, you're clear on this number, is maybe set some targets around it. So for example, I spoke to an agency owner just last week who's just made a round of redundancies. And what he said to me was, look, we do not go below that 3-month mark. So for them, their 0 point is actually the 3-month point. He said it's just unacceptable that we will go beneath that. That is our buffer. That helps me sleep well at night. I have made these changes, however painful they were, these redundancies, so I didn't creep beneath that 3-month mark for them in terms of overhead as cash in the bank. That was their line in the sand. My question for you is, what is your line in the sand? What is the point at which you will not go beyond when it comes to the cash in the bank? Something for you to ponder. Now, once you've worked out where you're at, next step is to calculate where you're going to be. Now, this isn't an overall destination. This is looking at things week by week. And when calculating where you're going to be week by week, the first question is, well, what tool are you going to use to do this? Because you're not going to be able to scribble this down on a bit of paper. You're going to need some sort of tech. And there's a number of options for you out there. First of all, we have created a free tool for you to use. It's a brilliant spreadsheet. And if you go to wowco.uk/cash, and we're showing that link in the chat right now, you will be able to access something that looks like this, completely free to use. By the way, when you take a copy of this, you take your own personal copy. We do not have access to this data. No one has access to this data. It's your personal copy. And you can play with it and do with it and create multiple copies, do whatever you want. Now, what you do is along the top, you can see the days of the week. And down the left-hand side, you'll see some examples of some income and costs. And what you'll need to do is download some real numbers from zero as a starting point. And what you can do is you start to plumb in those numbers, and there's instructions in the spreadsheet, is have a look at this tab, your total cash balance. It looks at the opening and closing balances each day. And this is a typical agency lifestyle. You start off with a balance, don't you? And some invoices get paid, and then you have the first pay run in the month, and then a few more get paid, and then a big one gets paid, few just before payday, and then bang, down it goes again. And hopefully it rises up throughout the month. And what you're looking for is there a point where it goes beneath a particular threshold? It takes you into your overdraft, or it takes you beneath your 3 or 6 month buffer, whatever it is that you have in your head as the point of no return. So this is an incredibly useful tool, very simple to use. It's our gift to you. I know a lot of people have used it. But it is just a simple tool. If you're looking for something that can do things in a more visual way, then there's a couple of tools that can help. So Fathom and Float will both link to your Xero and download your transactions directly. They can do more complex scenario planning, and obviously they come with a fee attached, but I know a number of clients use those and use them to good effect. So have a think about which tool is right for you, and start plotting things week by week so you know exactly where you're going to be at, or at least have a good guess at where you're going to be at week by week to see where those pinch points are. Now, some tips when forecasting your cash flow. First of all, don't forget this one, page 1 of the textbook, sales and costs need to include VAT. It's important that we're realistic with customer payment terms. So when working out where you're going to be week by week, a key determinant of that is going to be how quickly you get paid, particularly on some of those larger invoices. So not all your customers will be the same and will pay on the same terms. And it's important that you go back and look at their history. You know, do they say, is it 30-day terms that you've agreed with them, but actually they pay 60? Well, actually, it doesn't matter whether it's their behavior that matters most, not necessarily what you've agreed. So look at their behavior to help work out when they're going to get paid, when you're going to get paid. And also be aware of forecasting new deals in your cash flow. So when you win a new contract, we're always far too optimistic about how long it takes to actually, you know, engage with the procurement team and finally get things kicked off with contracts and get the first meeting booked in, and then finally build that first piece of work. So just make sure that you allow a sensible amount of time when planning for when you can invoice, and therefore when you can get the cash in for those new deals. And don't forget the seasonality of your business. If you've been in business a little while, you'll be able to go back and look at your profit and loss from the last few years and see whether there is any seasonality. You might know this intuitive. You might already know that December's a hideous month, or Suddenly January's boom time for your business. But have a look at what's important to you. I know a couple of businesses who deal with US clients, and they just shut down over the summer. Very little happens in their business over the summer, and that's a pinch point for them. When is the pinch point for you? Build that into your forecast. Again, what we're trying to work out here is where you might need those cash injections. Now, when it comes to managing money going out, I'd encourage you to look at the timings of your VAT, corporation tax, and personal tax, because it is possible that you could get a triple whammy here. And in January, you can end up with a personal tax bill, a corporation tax bill, and a VAT bill. And that's not a good place to be. Now, you can change when your VAT quarters are. You can change the payment of your corporation tax. You can alter your year end. And that might be sensible to do if it's coming at a point when cash is at its lowest, when you need to pay those bills. So have again, look at the seasonality of your business, look at when you need to pay certain key bills, and make sure you have separate bank accounts for these, interest-bearing bank accounts. I mean, actually, now more than ever is a time when having money in the bank actually is worth doing, because you can get pretty good rates of interest. And what I encourage you to do is, when looking at these rates of interest, look at risk first of all. So we know that the government will back or protect, I think it's £85,000 of our money if it's in an individual bank account. Now, if you've got lots of cash splitting up into £85,000 chunks, just is an administrative nightmare. So you might need to, again, just think about risks and look at making sure that you're banking with some of the big, financed high street banks, rather than some of the obscure ones that perhaps we haven't heard of. So definitely separate interest-bearing bank accounts for these. This isn't your money. You're going to have to pay it over to the taxman eventually. So putting in a separate account is really good practice. Also think about the timings of your other big payments, like rent and rates and other annual renewals that come up. And what we're looking for, I talked at the start of the presentation, talked about flow. We don't want this to be lumpy. We want to spread payments out as much as we can and see if you can move as many of those large payments to monthly. It's also worth assessing your personal situation too, because often the two are very closely linked. And you may have some personal expenditure coming up in the next 12 months that the business will need to fund. Have a think about when those pinch points are, and maybe when you might need to draw some extra money from the business in order to fund those personal expenditures, and then how that will impact your cash flow. So what this will give you, what that detailed look will give you, that week by week look, is this. This is an email received from a client having just taken them through this exercise. And they said, it's given me clarity to make some big decisions with real intel, rather than just hoping it'll all work out. And this is the power of clarity. I remember when COVID hit, our clients and the world went into meltdown as we were all fearful about what happened. And our job as accountants was to give our clients clarity and help them put plans in place. And what we noticed was really interesting. Within 24 hours of helping them create these plans and giving them clarity, a lot of the anxiety disappeared, dropped away. They weren't hoping it was going to work out. They had a plan about what they were going to do differently. Now, the situation hadn't changed, but what had changed was they had the plan, they had that clarity, and this is what that week-to-week view will give you. So armed with that week-to-week view, we can then do step 3, which is to evaluate risk. And there are lots of risks within our business. So some key risks that we all need to evaluate: not getting paid or payment being delayed. So what would happen if some of the invoices that you currently have issued, the client defaults or payment gets delayed by an extra 10, 20, 30 days? What would you do in those scenarios? Particularly if you have, I spoke to one client the other day who was sweating on a £250,000 invoice coming in and literally losing sleep over it, having dreams about it, having nightmares about it, checking the bank's balance 3 times a day. We all probably know what that feels like to some extent, that feeling. But what would happen if that gets delayed another 10 days, another 20 days? What is the risk of that? What happens if a large client leaves? Again, Those of you who've been through COVID will probably know what that feels like. That phone call, that email that you get from a client that says, look, I'm really sorry, we're putting things on hold. What would happen if your largest client leaves? When we look at our bench press data around the reliance for agencies on single clients, there could potentially be challenges there for a few people listening to this. And if you're one of them, it's really good to have a plan about what would happen. The other risk to evaluate, what happens if demand just generally drops? You don't have clients leave, but they just all start spending a little bit less. And what would that do to your cash flow? What happens if demand increases? I had a lovely conversation with a client who was, well, going through, I suppose there's different types of stress, but they were stressing around what would happen if they win this £1 million contract that they were pitching for. Now, I'd rather have that stress, and they would too, than the fear of losing a £1 million contract. But nevertheless, what happens if demand increases? You suddenly win a big deal and you've got to hire a load of people to resource it. What would you do in that scenario? And by the way, this new deal might be on longer payment terms, going back to the email received right at the start, where larger clients, larger invoices, longer payment terms, but you've had to just increase your wage bill. How would you cope with that? And maybe an issue with your bank. I talked earlier about the risks associated with banks. We had a few clients who banked with Silicon Valley Bank when that went into liquidation earlier this year. And that was a scary weekend for them. That was a really scary weekend. And, you know, that could happen again. But there's other risks associated with your bank. We've had a couple of clients recently lose access to their bank accounts because of cybersecurity or perceived cybersecurity risks. So the bank have said, look, due to a potential fraudulent transaction, we're just not giving you access to your money until we sort this out. And they weren't able to pay bills, weren't able to pay staff. And that's a potential issue. It's happened a couple of times in the last quarter. Other things, one bank closed off access to our clients because they didn't complete their Know Your Customer information. They'd received loads of emails, loads of texts, gone to the wrong number, gone to the wrong email address, and the bank just said, well, we can't verify who you are, so we're shutting down your bank details until you fix this. So this is where you get to think about what would happen if, and maybe spreading that risk around multiple high street banks so you have access to cash in different pots would be a good place to be. So for each of these areas, what's the likelihood of this happening? What would happen if it did? This is where the planning comes in. This is where you, rather than planning in a state of panic because the thing has happened, you're calmly planning what might happen from a position of calm, clear thought. And you can do some scenario planning, okay, depending on the likelihood, and explore your options. Now, when you're looking at this, if you are sat there thinking, well, actually, we need to cut costs significantly. Our biggest cost is our staffing. We need to look at that. I'd encourage you to seek HR advice early, even if it's not something you need to do right now or might not need to do for a few months. It's really good to understand your options. And if you're a client of the Wow Company, we have a HR advice line that you can call. It's free. It's part of your service. You can call that number and get HR advice. If you're a member of the agency collective, you get HR advice as well as part of your membership fee. You can speak to Sarah and contact her for a free session to get advice. So understanding your options early is really important. Looking at, there's plenty of alternatives to redundancy as well, reducing hours being one of them. So get HR advice early, and hopefully there's a few places for you to go for that. Now, what I'm hearing from clients about the risk is really interesting. Again, I spoke to a client the other day, said, look, we're currently in a tender process for a £2.3 million a year project renewal. If we don't win it, we'll need to let 25 people go immediately. Now, that's brutal. That's really brutal for all of those 25 people. But that's the reality of the situation they find themselves in. They know what they will need to do the moment they hear the news that it doesn't go their way. Now, hopefully it does, and hopefully it'll be different celebrations, but that's a very real possibility. Another conversation, a really tough conversation I had with a client, they said, we've been in business for 20 years and we've never had to make redundancies. All it took was a couple of big deals not to drop and a few key clients to go quiet. That's all it took. A few deals not to drop and key clients to go quiet. And we're now making 7 people redundant. That's over 25% of our team. Now, whilst that's really tough to hear and tough to experience, what I saw in that business was them taking proactive action early, and they're actually in really good shape. They've sharpened up in a number of areas that will help them not just ride this out, but flourish further down the line. However hard that decision was, they're actually put themselves in a really positive place for 2024 and beyond. So once you've evaluated the risk, what we do next is assess your funding options, because when you've done your scenario planning, it's quite possible that you will need some funding along the way. And what might you need funding for? Well, you might need funding to grow. We looked earlier when we did our survey, and there was a chunk of people who are actually growing quickly. And when you grow quickly and hiring staff and maybe getting paid, taking longer to get paid, you're going to need that investment to grow. That's a perfectly legitimate thing for you to go out and get funding for. You might need funding for capital purchases. You just moved offices and you need to kick the whole place out. New Apple gear or new servers or new desks and chairs. And again, capital purchases to help you do that. It might be to plug a short-term gap. Maybe you have lost a large client, but have a really strong pipeline. And actually, do you know what? If you can just get through the next 6 months, things are looking pretty good beyond that in terms of your committed revenue. We just need to get through the next 6 months and something to plug that gap. Perhaps it's funding the business whilst you wait to get paid. Billing's looking great. You just send out a load of invoices, but they're on really crazy terms and you're going to take ages to get paid. And so you need funding to wait whilst you get paid. Maybe it's for acquisition. You know, I've started to see some of the smaller businesses that are struggling start to think about maybe, well, to be frank, packing it in, joining up with someone larger. And I think over the next year or so, there will be some smaller acquisitions. Some of these small businesses will just merge, fold into larger ones. And maybe there's an opportunity for some of the larger agencies to gather up some talent, pockets of talent, and you might need funding to do that. So what you should not use funding for, what you need to make sure you are not using funding for is this: to fund an unprofitable business model. It's really important. We have a duty as business owners to make sure when we look at those numbers, we're being realistic and pragmatic about the situations we find ourselves in. Are we funding for growth or to plug a genuine short-term gap that we think we can come out of? Or fundamentally, do we have an unprofitable business model? We just need to cut costs. We need to rethink our clients and our service offering. Now, that's a tough question for you to ask yourself, but getting to the heart of your business model and ensuring that it's profitable is the key to running a beautiful business. This is what it's all about for all of us. And just borrowing money to fund an unprofitable business model will leave you in a worse situation in 6 months' time. Make sure you don't do that. So when it comes to finance options, there are lots of them. We did some research recently that showed the array of funding options available to agencies and indeed taken up by agencies. So let's have a little look at what those are. First up, 53%, over half, use a bank overdraft to fund their business. We then have 37% have taken out a business loan. 29% have used a credit card. 25% are using R&D tax credits to fund their business. Again, hopefully you're familiar with R&D tax credits. If you're not, they are a great scheme set up by HMRC that reward businesses that invest in research and development. You actually get money back from HMRC if you are engaging in research and development and can prove you have the work you're doing qualifies. If you need help with that, this is what we do all day long at WOW. We've got a brilliant R&D tax team that get these refunds for clients. I think the average refund we got in the last 12 months is £67,000 for clients, and they're using that to fund their growth, which is brilliant. 16% are using invoice factoring or discounting. This is when you send an invoice out and you have long payment terms and you work with a company that pays you quicker whilst you wait to get paid. And then it's a great way of funding your business if you have clients on those long payment terms. And there's a company called Sonovate that do a brilliant job of helping a number of our clients with their invoice funding. There's lots of other ways. So 13% have taken out a personal loan and put it into the business. 11% have used friends and family. 8% have used grants or competitions. Now, there's a lot fewer grants out these days, around these days, than there were previously, certainly when we set up the business 20 years ago. But there are still plenty available, and we know agencies are taking advantage of them. Then we've got asset finance, specifically if you're purchasing assets, and then peer-to-peer lending, selling shares. We've got a few others at the bottom of the list. And there are a lot of options, right? And each of them comes with different interest rates attached, different terms. And if you need help making sense of the options, here is where you need to go. If you go to wowco.uk/finance, we've teamed up with Swoop to help you make sense of all these options. So there is a 3-minute questionnaire. When you click on that link, we just shared it in the chat, a 3-minute questionnaire. So first of all, it asks, are you starting a business, want to grow, want to improve? And then it'll ask you some questions about your business and what you need the money for. And what you will get is a list of options for loans and the rates that are applicable. So based on the information you're given, it says, well, these are the loans that we think are available to you. And by the way, so it's luring you in with these 6-7%. And by the way, there's a long list of these. What we are seeing from our clients that have worked with Swoop over the last 90 days are they've secured loans with interest rates between 9 and 17%. So if you wanted a rough guide, look, it is possible to get loans for 6-7%. It's tricky. If you were to, in terms of your budgeting, between 9 and 17% is what we have helped clients get loans with using Swoop. And the other cool thing about Swoop is this. It also lists, based on, once you've completed this 3-minute survey, all of the grants that are available to your business, because when you at the start, it asks you to select which industry you're in. Based on that industry, it gives you the grants that are available. And again, they have a service that can help guide you through those if you need to be. So a really useful tool for you to use, wowco.uk/finance. Right. Next up, step 5, get paid quicker. If you want to improve your cash flow now and beyond, let's get in some good habits when it comes to getting paid quicker. And what we're trying to do here is reduce the receivable days, the amount of time it takes to get paid on average. And the tips I'm going to share with you are tips that we shared with a client when we first started working with them. And they've been going 30 years, really good business, but we were astonished at the bad habits they'd got into when it comes to how they managed their clients. And we took them through these steps. They implemented them all. And as a result, it took their receivable days from 50. So average number of days it took to get paid was 50 when we started working with them. And 90 days later, we'd got it down to 20 days just by implementing these steps. So here's what they did, and here's what you can do. So first of all, it's really important that you have strong commercial terms stated up front. And what strong commercial terms look like is reducing your payment terms to 7 days. Now, I know that this will jar for a lot of people who will say, well, that's ridiculous. I work with blue chip companies. They're never going to accept 7-day terms. You're probably right. They won't accept 7-day terms. However, this is part of your negotiating strategy. If you start off with 30 days, then well, you certainly can't go back from that. This allows you to have a negotiation with them from a much better starting point. And you can justify it too. You can say, look, well, hang on a minute. I need to pay my team who are going to be working on this. And if you're going to take 30, 45, 60 days to pay, I'm going to need to fund that. That's going to add a cost. So if you're going to pay me on 60 days, but I need to pay my team by the end of the month, then we're going to need to add a financing cost to this. And you can potentially build in some of the finance costs that you're going to have to take out. I'm going to have to add 9 to 17% onto this. I'm really sorry. And see what they say about that. Now, I remember talking about this at an event. It was an agency collective event in Bristol. It was a dinner we did it ages ago. And I remember talking about this, and it sparked a lot of debate amongst the room, particularly those working with larger businesses who just really struggled to get their head around this concept of how on earth that's having the temerity to ask for 7-day terms. But, one person just piped up and put their hand up and said, well, look, do you know what? I've done this. They said, I went in, negotiated with a large telecoms company that's renowned for paying on 60 days. And by starting off with 7-day terms, I was managed to negotiate them down to 30. And that was a massive win for them. You know, they're getting paid 30 days quicker because they started off with strong payment terms, commercial terms stated up front. So make sure you do. Make sure you include compensation for late payment. If they are going to pay late, you add interest to it. And also it's important not just the terms on the invoice, but to invoice more upfront in your project. So one of the things we explored a little while ago with Benchpress was how much agencies actually invoice upfront. And we looked at the project size ranging from under 10K all the way up to $250,000 and above. And we looked at the bottom 25%, what the average was and what the top 25% was. What you invoice upfront, your very first invoice. And here are those stats. Now I'm just going to flash them up on the screen, but then I'm going to do this because we don't want to be in the bottom 25% or the average. This is where we need to be focused on the top 25%. And you will see that the minimum that is invoiced for any project size is 33%. So even for £250,000 projects, people are invoicing a third up front. For the smaller ones, they're invoicing half up front. So my challenge to you is, how can you invoice more up front? Because up front is where the effort is. I mean, even by the time you get them to say yes, you put in a ton of effort in your pitching process or sales process. And then there's the discovery and the onboarding and the initial meetings, all of that energy, all of the efforts up front. You need to make sure that you bill accordingly. And as well as a large upfront payment, it's important that you invoice regularly throughout the project. You often will hear people talking about lumpy cash flow. It's because they've got these huge invoices going out. Make sure you just invoice regularly throughout the project, smaller amounts, get them paid, get the cash flowing, and just leave less till the end. You know, you only want to leave a very small amount till the end, ideally nothing, and keep some leverage, retain some leverage so that you don't deliver, you know, the final piece of work until you have been paid. That's also really, really important. As is helping your team understand billing milestones. So when you look at the work running through your studio in every given week, you know, you will have to make decisions around priorities and helping the team understand, look, if we get this bit of work done by the end of the week, we get to send out this invoice, and it will just help you maintain that cash flow and get your team focused on billing milestones. I remember hearing a story from one of our accountants who just had a year-end meeting with one of their clients, and the client turned up really happy with how the business was doing. As they said, we just won loads of work over the last 12 months, you know, business is great. But when we had to explain to them that they might have built, they might have won a load of work, but they hadn't been getting through those billing milestones quick enough. They hadn't been billing the days. Unfortunately, it wasn't quite such a cheery meeting, but they implemented systems that meant they were much more robust at getting through those tasks in the month. The other thing that will help this client, this case study that I'm talking about here, is using direct debit. Now, again, you know, you will not get your large clients to sign a direct debit. It simply won't happen. But if you are an agency that works with small and medium-sized businesses, direct debit is a really useful tool to help you get cash collected quickly. And you can use things like Go Cardless, which links to your Xero. We've been using it at Wow for years, and it's a great tool. It can link to your Xero, so as soon as you send out an invoice, it can automatically collect from the client and be in your bank account and auto reconcile in Xero. It's really handy. So step 6, we're into the final couple of steps now. We're getting into the detail, but this is where it really matters. The next few tips I'm going to share have the potential to be really, really interesting for your business, because we're now into implementing cash management systems. These are the habits that will ensure that you have the cash in place to sleep well at night. So, and habits is really important. So when it comes to cash management for clients, invoice throughout the month. Now, I talked about invoicing throughout the project, but what I'm now talking about here is invoicing throughout the month. If you complete a milestone, don't wait to the end of the month to bill it. You know, if you complete a milestone on the Tuesday, send that invoice out on the Tuesday. The beauty about Xero is you can give all of your account managers and project managers access to just the billing element of it, and they can send out invoices and on the day, in the moment, and get them in the client's account system. You can also pre-chase large invoices. Now, in the old days, you know, 20 years ago when we set up Wow, what that meant was phoning up a purchase ledger department. These days, increasingly, it's all done online. But what you can certainly do, if you don't get the tick, you can just check in with your contact and say, look, I've just uploaded it to the finance system. Can you just check they've got all the information, when they intend to pay it. Having those conversations, certainly for the large ones, will help you sleep better at night. You can also do some auto chasing in Xero. There's some great functionality that will allow you to chase invoices or perform certain actions, send emails after 7 days, after 14 days, after 21 days, etc. Now, to do that, you need to stay on top of the reconciliation, because you don't want to be firing off emails for invoices that have already been paid but you haven't reconciled. So you need to make sure you do that bit of the jigsaw, but you can do a lot of the chasing automatically. And then it's important to do a weekly review of debtors and share that with your key team members, because often they'll be working with clients, they'll be able to have conversations with clients, and they'll be able to influence the payment of some of these debts. But as well as having sharing that information with key team members, it's really important that you have one person responsible for cash management. Now, for the larger agencies, that might be your finance manager. For the smaller ones, it might be you, or it might be your office manager, but someone needs to be responsible for looking at that list every single week and getting that money in. I promise you, as soon as you shine a spotlight on this area, you'll watch those debtor days come down. Now, other tips, cash management for clients. There needs to be a formal process in place if they fall behind. What happens if they don't pay after 7 days, 14, 21, 28 days? The answer is, for most people listening to this, oh, I don't know, haven't really thought about it. Well, my encouragement to you is to think about it and answer this question. When will you stop work? At what point is it not acceptable for a client to pay you anymore and for you to continue working? You get to decide where the line is, but it's important that you do decide where that line is. What we did with, or what the client, the case study that I shared with you earlier, what they did was they decided that if they hadn't been paid after 14 days, so the invoice was 14 days overdue, they would stop work on that client and say, look, I'm really sorry, but there's an invoice outstanding. We can't carry on working. As soon as it's paid, we'll crack on with this. And that, done in a friendly way, resulted in some real positive behaviors with the client. If you get really stuck, if client hasn't paid you, completed the work, you've lost leverage, unfortunately, and they're really not paying, the debt is outstanding for a long, long time, you've tried everything, there are some legal letters you can send. We're going to share a link in the chat to a legal letter. It costs just a few pounds to send. Now, this first thing to say is, this is a last resort, right? This is if the relationship has broken down and you now need to take legal action. But often sending just this letter, paying a few pounds to do so, will kick the client into action. As I say, it is a last resort. Please try to maintain the relationship for as long as you can. But if you need to, it's good to know that you can go down that route. Now, cash management for suppliers. It's not just about money coming in, it's about managing our money going out as well. So it's important, I think we should treat suppliers differently. Freelancers need that money. They're often, living hand to mouth, month to month. And I think we should pay them quicker than we do our corporates. And generally, as a rule, we shouldn't pay quicker than we need to. So whilst we're trying to get money in quickly, we need to make sure that we keep hold of it for as long as possible, whilst respecting, certainly for any freelancers and small businesses that we're working with, that they're often in a similar boat to us, and we need to respect that. It might be beneficial to speak to your landlord. Maybe if you have quarterly in advance payments, perhaps you could go to monthly, potentially even in arrears, just to even out the cash flow. And when you're looking at your money going out, it's really important when times are challenging that you don't cut off the services you need more than ever. By all means, assess that you are getting value from everything that you do. But particularly, let's take marketing, for example. It's just such an easy one to just strike off, right? But this is, the time when you need to be marketing more than ever. You should definitely be assessing the validity and the effectiveness of the marketing that you are doing. But in the same way that you wouldn't want your clients, you think your clients would be daft just to cut off your services just because times are a little bit tough, then don't fall into that same trap. Then there will be things that you're currently paying for, services, support, advice, that you will need more than ever. So just assess, but don't cut off. Now, tips for dealing with HMRC, because some of the big payments that you have to make over the next few months will be to HMRC. And the good news is that there's an easier way to spread these payments. So you can set up a payment plan online. You don't even need to talk to anyone. If you owe PAYE of less than 50 grand, personal tax of less than 30 grand, and VAT and corporation tax of less than 20 grand. And there's a link that we're sharing in the chat that will provide more information about how you can do this. So that's pretty good. You can set up a plan online if you owe those small amounts of money. However, if you owe a large amount of money, you will need to phone. And if you call, try between 8 and 9 o'clock to avoid a long wait, because it is a long wait if you call in the middle of the day. And when you're speaking to them, this is really important. If you mention that you've experienced delays to receiving payment, that's much better than saying you've got cash flow issues, because HMRC are currently taking offense to anyone who says they've got cash flow issues, because they see it as not their job to fund your cash flow. However, if you go to them and say, look, I've had delays to payments being received, then they're actually really amenable and will help small businesses to navigate those delays. Now, if you don't get the answer you want first time, what we have seen is clients hanging up, calling back, trying again, and maybe finding a more cheerful HMRC representative that gives them the answer that they want. So it's worth doing. If you suddenly find yourself in a jam, owing a chunk of money to HMRC, call between 8 and 9, mention you've had delays to receiving payment, and see if you can get an answer to help spread those payments over a number of months. You will need to pay the money, but if you can do it over a number of months and get you through this, that will certainly help. So final tip and final step to better cash flow is this. We all need to track our leading indicators when it comes to cash, and track them like a hawk, because cash is a lagging indicator and profit is the precursor to cash. Think all that cash in the bank that you have right now, it is a history lesson of everything that has gone before, all of the deals you've won, the work you've done, the invoices you sent, and finally the cash you've been paid. Profit is where it's at, which is why it's more important than ever that we measure our gross profit in detail, that we understand very clearly where we are making money and where we are losing money. That's our jobs as business owner. We need to know where we're making money and where we're losing money, and this will help us do it. Can you measure gross profit by project? Do you know live in real time whether your projects are profitable right now? Can you measure gross profit by client? I'm sure you can tell me by turnover, but can you do it by profit by client? Can you do it by group of clients? Maybe there's a niche of clients, or can you do it by account manager and say, well, actually, I want to see this account manager's portfolio or account director's portfolio versus that account director's portfolio. Can you look at gross profit in that level of detail? Can you look at it by service offering? You know, if you have multiple service offerings in your business, which ones make money and which ones don't? Can you even do it by individual team member? Now, this is like really granular, but 9% of agencies can actually do this. Look at their profitability by individual team member. Are you one of them? Because this level of detail, like, let's be honest, if I said to you right now, you could click your fingers and I could show you this information, you would all take it. You would all absolutely take it. And once you see it, you wouldn't be able to unsee it. You would take action on it. I guess the challenge we'll have is, well, getting this information in terms of the timesheeting, the systems, well, that's hard, but it's worth it. So have a think about what systems you can put in place, what the next level is for you, how you can use this information to your advantage to ensure you have the cash in place. Now, before profit comes sales, right? We've got no profit to measure if we're not selling. And so the leading indicators we need to track are daily and weekly early sales indicators, the number of new leads every single day, every single week coming into our business, the number of sales conversations we are having as a result of those leads. And then crucially, the activity that leads to all of this, right? We need to be watching this like a hawk, because we need to know day by day, week by week, are we doing the things that get us the new leads, which leads to the sales conversations, which ultimately leads to deals, which leads to profit, which leads to cash, right? This is the journey we all need to go on, and we need to go right back to the source of this and measure those early indicators. And we also need to do this for our existing clients. I see so many agencies right now more than ever, going back to their existing clients and pitching to them, getting closer to them, really deeply understanding their challenges and seeking out opportunities within them. People are saying, every week we're getting our teams together, coming up with ideas so we can go to clients and suggest them. Are you doing that? I have one final tip for you, a bonus tip. And it came from a conversation I had with that client who had made those redundancies, 20 years in business, really good business, really good team. And they had to make some tough decisions. But what they have done is they put themselves in great shape. But what they've also done is tweaked a few things. And the key word for them is hustle. And the key word I have for you is hustle, because what they've given themselves a wake-up call. And when we find ourselves in periods of economic downturn, often there's a few areas that we just need to tighten up on, right? We've just got a little bit slack in a few areas. So let's go back to that feeling that we had when we started our businesses. We all started our businesses from nothing, right? We had no clients. We had no track record. We had no clue, but we had a bundle of energy and a lot of focus. And if you can get back to those early days of business, get that hustle, tighten up on key areas of your business, focus on those leading objectives, you will create some great habits that will not only see you through this period, but well beyond. Now, as you go on this journey, if you need help, we are right by your side. Whether you're a client or would like to become a client, you can email help@thewowcompany.com. Let us know your challenges and we would love to help you solve them.